Bismillahirrahmanirrahim. Assalamu alaikum. I am Syed Akif Shah, Lecturer Finance at Institute of Business Studies, Pahad University of Science and Technology. The title of this course is Principle of Accounting, and the course code for this subject is BS 161. This is our lecture number 26, and the topic for today's discussion is adjusting entries and making adjusted trial balance. So basically this lecture is in continuity to my previous lectures, in which we have started the discussion related with the accounting cycle, which will occupy the series of lectures to be completed with the help of certain numerical illustrations. So in this lecture particularly we'll select a numerical illustration that will address the most of the steps that are required to be completed in an accounting cycle. However, as we have already discussed and explained the first three steps of the accounting cycle, that is to make the journal, recording the entries in a chronological order in a particular specimen. The second step is to make the ledger accounts by opting and carrying forward the entries available in the journal to the next step. So we can use either the T-shape mechanism or format to make the ledger accounts, or secondly we can use the running balance format for making the ledger accounts. And from that, step number 2, we are going to the third step by making the trial balance, where we are going to check out either we have correctly entered the entries in the previous two steps or not. So that will help us to check the trial of our balances available in the ledger accounts. So let's move ahead. The outline of this lecture consists of, once again, the discussion related with the understanding of a complete accounting cycle that will cover one particular time period, as we have already studied in the time period assumption in the initial lectures. In specific, this lecture will address the numerical case we have selected is problem 3.11 on page 137 of the recommended book. In this problem, the specific agenda of the lecture will be to discuss the adjusting entries and then to make correction in the trial balance, and then finally the fourth step is to obtain the adjusted trial balance. Let's move to the next slide to see the numerical illustration and then to discuss how to do those adjusting entries. So this is a thorough and a detailed numerical illustration, which is problem 3.11, and this short narration states that what we are going to do in this particular numerical problem, that is end of the period adjustments. We have to perform certain closing entries procedures, and then finally preparing the financial statements that consist of making the income statement, statement of owner's equity, and then finally the balance sheet. Specifically in this lecture, we'll discuss the adjusting entries so that we will be able to make the adjusted trial balance as required in the accounting cycle. So let's read out the numerical case carefully before delving deep into the instruction portion. The operation of Hampstead Realty, this is the name of the business which we have to figure out very carefully. The name of the business is Hampstead Realty, and the realty is a kind of business that is related with or dealing in the property related activities like buying and selling of houses and land or real estates. So Hampstead Realty consists of obtaining listing of houses. It's just like a property dealer business as we have normally in the Asian countries, being offered for sale by the owners. So owners are actually listing their houses, are obtaining the the offers by the different owners to the Hampstead Realty. And the task of this business is to advertise these houses and showing them physically to the prospective buyers. Prospective buyers means the buyers who are looking to purchase these houses. So they approach the Hampstead Realty and they usually advertise and show them. And for this activity, the company earns what? Definitely they are going to earn revenue in the form of commissions. The basic revenue of Hampstead Realty is to earn the commission. Furthermore, the statement states that the building and office equipment used in the business were acquired on January 1st. This Hampstead Realty acquired or purchased the building and office equipment on January 1st of the specific year that is not mentioned over here. Here it's only the current year, and were immediately placed in use. The moment they purchase it, they start using the building and office equipment. Dear student, every asset has a particular useful life, and particularly for tangible assets, except the land. The useful life of building was estimated to be 30 years. The engineer's opinion is that this building will last for the 30 years and its useful life is only this specific time period. And the office equipment they have purchased, its useful life is only 5 years. That is to explain that after 5 years you have to change the office equipment, because this equipment or the long-term asset will fully be depreciated over the next 5 years. Here I have used the word depreciation, which I'll explain shortly to you as you are new to this word. So I'll explain what's the purpose and phenomena and theory behind the depreciation in accounting. The company closes its account monthly. The monthly, it means that time period for this company is to have 1 month, so that they have to complete the complete accounting cycle in one particular month. So on March 31st, that is the closing of the month of the current year, the trial balance is as follows. This question has actually performed the first 3 steps, that is, they have already done journal. They are not asking you to make the journal. They have made correctly the ledger accounts, and finally they are on step number 3, that is, they have provided you the trial balance on the next very slide. They are expecting you to reach to the 4th step, that is to have the adjusted trial balance after making certain adjusting entries, and to reach at the step number 5, that is to make the adjusted trial balance. So here we have a complete detailed version of the trial balance available in the question. And just beneath this trial balance, the instructions are stating us to perform A to F different activities. Let's understand the trial balance and the data given in this question so that we'll be able to perform the 4th step, that is to make certain adjusting entries what are required in the subsequent instruction section of this trial balance. Let me explain you once again that how the trial balance looks like. We have to mention the company's name at the top, like Hampstead Realty as mentioned. You can use the capital letters to make it prominent from the rest of the title. However, if you would like to use the small letters by following the regular rules of mentioning the first letter in capital and rest in the small letters, you can do so. But in order to make the company name prominent, you can use the capital letters to mention the company's name. Secondly, you have to mention the financial statement or this statement name, which is trial balance. And then you have to mention the proper date format, that is to write down the month in English letter. Then it's 31st of March, that is the end of this month, and then insert a comma. And then you can write down the year of this month, which is 2001. You can put the above information in a particular rectangle. and then you can insert the rest of the account titles in the order of liquidity. Basically, this left column is the debit column. That is, these figures or these numerical values are pertaining to the debit entries, and the right side column is the credit column in the trial balance. And as a reference, you can see in the yellow highlighted text that this numerical is pertaining to the book named as Accounting Column Basis for Business Decisions. So we were at the discussion of debit and credit numerical values. So the right hand side of the trial balance is the credit column, and the left hand side is for the debit column. Just like in your journal, we have to mention the debit entries first and then the credit entries. You can insert a line to differentiate between the two columns. However, if you are expert enough to make a visible difference between the two columns, like as mentioned before you in this question, you can omit this single line as well. So what's the rule to record the account titles in the trial balance? Is to follow the order of liquidity, as we have already explained while we were discussing the balance sheet in our lectures. So order of liquidity needs to be followed in this trial balance while you are recording these account titles. As I have explained to you earlier that this question has already performed the initial 3 steps of the accounting cycle. That is, they have already done the journal, they have made the trial balance, the ledger accounts, and then the third step, which is the trial balance, and they have trialed their balance obtained from the ledger account balances. Like these balances were selected from the previous step number 2, that is the ledger accounts final balances, and they have been put into the trial balance in this fashion. And finally, this trial balance means we are going to have a trial of our balances in the ledger accounts. So finally, we can see that both the columns, which is debit and credit, as we are following the double entry accounting system. So according to that double entry accounting system, every debit entry will have a subsequent credit entry with the same amount. So the balance of total debits and credit must be matching with each other. So if these two columns balance match with each other, we got a clear-cut clue in the examination or while you are attempting any problem that you have correctly done your debit and credit entries in the previous 2 steps. So let me remove the ink so that we can go ahead. So as I was talking about the order of liquidity, so the highly liquid asset for any company is cash. So therefore, at the top, cash is mentioned, which is $9,750. We are inserting the dollar sign only with the first title's figure, that is $9,750. We are avoiding to mention the dollar sign with every numerical value so that our numerical values must not got a mess up numerical values. So every book has its own rules and regulations. So particularly this book is usually following the dollar sign with the first title in the credit column, which is pertinent to the accumulated depreciation, which I'll explain what is this depreciation shortly. And then not to mention the dollar sign. And after inserting the single line, you have to insert once again a dollar sign. This finally, the double line represents that your question has closed down, or this statement has closed down at this particular step. So let me remove the ink once again. We are following the order of liquidity by mentioning the cash at the top. However, if you are given with certain balance sheet in a question, or as a hint, you can also follow the balance sheet rules, which I have explained already, that you have to mention the highly liquid asset at the top, which is cash, then account receivable. So we can see that the first few entries will be pertaining to the asset section. Then we have liability, which is anything, any account title having with a payable word will be the company's liability. And this capital represents the owner equity. And drawing is when the owner is actually withdrawing or taking out the money from this Hampstead Realty business. So in that case, the owner equity, which is the capital, will decrease. So therefore, this drawing has been mentioned in the debit entries, because if we remember the diamond rules of double entry accounting system, that which particular asset will get a debit entry and which particular asset will get a credit entry under what scenario. And similarly, the five main head of accounts, as I have already explained in my previous lectures, which are assets, liabilities, equity, revenue, and the expenses. So usually the capital got a credit entry when it is increasing and got a debit entry when it is decreasing. So when there is a withdrawing, so it will have a debit entry as mentioned in the debit column, and when the equity or capital is going upward, it will have a credit entry as mentioned in the credit column of this trial balance. After that, we can see the commission earned, which is the company's revenue. And as we know that when there is increase in the revenue, it will have a credit entry, and definitely normally we do have credit balance for our revenue account title. And after that, finally, the section explains all the expenses pertinent to this company, which are advertising expense, automobile rental expense, salaries expense, and telephone expense. And we know, according to the diamond rule, when there is increase in the expenses of the company, we have a debit entry, and when there is a decrease in the expenses, we have a credit entry. And normally we have debit balances for the expenses of the company as mentioned in the debit section of this trial balance. So this is basic understanding of the trial balance and how to make a trial balance by using the previous steps ledger account final balances. Now it's time to discuss the instruction after thoroughly studying the question and understanding the different account titles involved, that is cash, account receivable, office supplies, land, building, and then we have accumulated depreciation building, which I'll explain shortly. Office equipment, another asset, accumulated depreciation. Accumulated means that we have sum up the depreciation so far we have charged against the office equipment. Accounts payable, liability, M. Valentino capital, M. Valentino drawings, commission earned, which is the revenue, and so forth, so on and so forth for the expenses as mentioned before you. The question or the instruction asks us that from this trial balance and supplementary data, what is given in the initial discussion, you have to prepare the following as of the March 31st, 2001. And as we know that the company's account normally closes down each month, and this is the final day of the month, so we have to make certain closing entry as well. The instruction asks us in instruction number A to make the adjusting entry for depreciation during March, as the company closed down its account monthly basis, so therefore we have to charge the depreciation each month on building and as well as on office equipment. So the first instruction is asking us to have the adjusting entries related with the building and as well as office equipment. Let's go back and see that the company states that it closes down its entries monthly. So the company closes down its account monthly, so therefore we have to perform the monthly adjusting entry. So let's go ahead to the solution of this question, problem 3.11 part A, and part A is asking us to record the depreciation expense. So usually the depreciation is expense. Let's go back and to find out what is the cost of the building. We can find out in the trial balance that as we are following the historical cost principle, so the cost of the building is $90,000 as mentioned over here, and it has a debit balance. And usually we know that when there is a decrease in the value of a particular asset, it is known as depreciation with the passage of time. And otherwise we can say that as the engineers has given us that the useful life of the building is 30 years as mentioned in the initial supplementary details. So after 30 years this building will have no worth at all. And the question states that as accounts closes down monthly, so therefore we have to depreciate the cost of the building on monthly basis. That is, each month the building will deteriorate, or it will have a decrease in its value. A certain amount will be charged in the expenses portion against the building. We can already see that there is certain numerical value given in the accumulated depreciation building. It means that the cost of the building was 90,000. However, with the passage of time, we have a contra asset account which is having a $500 in accumulated depreciation building. It means that we have used building for $500. Therefore, the remaining worth of this building is now $89,500. However, we have to follow the historical cost principles, so therefore we are recording it on the original cost, which is 90,000, but the actual worth after the completion of 1 or 2 months or whatever time period has lapsed is now $89,500. And the question is asking us to charge another depreciation for the month of March, because the March month has also been completed. So therefore we have to charge certain depreciation against the building value. So how to do that? The procedure is to obtain or select the relevant data from the question, which is the building cost is 90,000. The useful life of the building is 30 years. The formula to calculate the depreciation is depreciation expense building is equal to the cost of the building divided by its useful life. So as we know that the cost of the building is 90,000 and the useful life is 30 years, so therefore this company is depreciating $3,000 per year depreciation. This company is charging depreciation against the building at the rate of $3,000 per year. As we are closing our entries monthly, so therefore we have to figure out the monthly depreciation expense, and the procedure is to divide this annual depreciation, which is $3,000, by 12 to get the monthly depreciation expense. The formula is that depreciation expense on building per month is equal to the previously obtained the annual depreciation expense for the year, and then whole divided by 12, as we know that there are 12 months in a year. So 3,000 divided by 12 will give us $250 monthly depreciation. So we can now conclude that the per month decrease in the worth of the building is $250. We can say that we have used our building for $250 and its worth has been depreciated by $250. Now this is actually the rough work what we are doing over here so far, because the question was directly asking us to record the adjusting entry, and for recording the adjusting entry we have to follow the specimen of the journal. Basically this is your rough work what we have done, and we know that the depreciation expense for 1 month is $250, so we have to follow the journal pattern, for which I'll not spend any time to explain. As we are recording this entry by the end of March, so therefore we have to mention March 31st 2001. And the procedure to record the depreciation expense is to mention the depreciation expense first, and then importantly put this column over here that will divide that, or that will explain that this depreciation expense is pertinent to which asset. So here the asset title is building, and as we know that when there is increase in the expenses it will be recorded as a debit entry, so we have done correctly our depreciation expense charge in the debit column. And then we have a contra asset account. The contra asset account usually have the credit balance. And by contra asset account, any account that decreases the amount of the asset account is known as a contra asset account. The contra asset account will be named as accumulated. Accumulated means to sum up so far. So the sum up depreciation against building is $250, which should be mentioned in the credit entry as we are following the double entry accounting system. So each debit will have a corresponding credit entry. So remember it that we must not record the credit entry first and then the debit entry. Rather, we have to record the debit entry first, then to have a slight indentation for the credit entry's title, which is accumulated depreciation against building, correctly entered. Finally, you have to give a short narration that will explain that to record the depreciation expense for the month of March has already been explained over here in the date column. So the short narration could be to record the depreciation for the month. So this is the way how we have solved the first instruction in the part 1, that is to record the adjusting entry for the building. Let's move ahead quickly towards the second instruction in part A, that is to record the similar entry for the office equipment. So we will follow the same procedure and the same specimen. Here we have the data. The office equipment cost is $21,000. From where we have taken this amount, let's go back to the trial balance, and we can see that in the trial balance the office equipment, figure out the office equipment over here, and its historical cost is $21,000. So from here we have selected its cost, and from the supplementary details we have figured out the equipment useful life is 5 years as mentioned over here. So let's go ahead. We got the relevant data for office equipment's cost and its useful life is 5 years. So we can follow the same formula, that is to divide the cost of the asset by useful life. So cost of office equipment divided by the useful life, 21,000 divided by 5. So the depreciation per year against the office equipment is $4,200. However, the instructions are requiring us to record the adjusting entry for a single month. So therefore, we have to divide the annual depreciation charge by 12. That is depreciation expense for the year divided by 12. So we have done it correctly. And the final monthly depreciation to be charged against office equipment is $3,500. So now it's time, as this was totally the rough working of yours. We have obtained the relevant value, which is $350, for which we have to record the depreciation expense to be charged against the office equipment. We have to follow the journal pattern, that is to have 4 basic columns of date, account, titles, and explanation, and then finally debit and credit columns. The date is March 31st, 2001. We have to mention the same specimen, that is depreciation expense. However, the division line with column is explaining that this depreciation expense is charged against office equipment. The office equipment has been decreasing its worth because of wear and tear and use, and its useful life was 5 years. So that there was increase in the expense. So whenever we are actually utilizing or using our asset, that portion of asset has been transformed into the expense portion what we have used. So until and unless we are using our assets, it will remain statically available on our balance sheet on its original value without any depreciation. But the moment we start operating or using our asset, so definitely there is wear and tear, and due to the wear and tear and usage, its value or worth decrease or depreciate with the passage of time. So that particular amount what has been decreased is known as an expense. So your asset actually transformed into the expense portion. So that specific expense, when there is an increase in the expense, as this is the expense title, it will be recorded as a debit entry. And the contra asset account, which usually decrease the value of the asset, shall be titled as accumulated depreciation, and then a division point to insert the column, and then to mention the title of the asset, because this asset has decreased so far with this value and it will have a credit amount. And hence we have followed the double entry accounting system by inserting the credit entry against the debit one. Finally, we have to mention the slide narration or explanation, that is to record the depreciation for the month. The simple formula was to divide 21,000 by 5, and then the resultant value should be divided with 12 as a whole, and you can get $350. So this was all about how to record the adjusting entries in the format of journal. Let's go back to the second transaction, that is the part B, what the instruction is requiring us to do in second portion, a second part of this question. Let me quickly read out this instruction, that the adjusting entry to recognize as expense the cost of office supplies used in March. So as I have already explained, for instance, before that, when you purchase an asset, it will remain asset until you have used it. So the instruction is stating that you have used the office supplies. Where is office supplies in the trial balance? Here it is, office supplies, and their cost is $850. However, during the month of March, that is starting from 1st March to 31st March, you have used certain office supplies. Therefore, at the end of the March, the supplies on hand are estimated to have a cost of $500. At the start of the month, we have 850 office supplies, but at the end of the month, we are left over with only 500 of supplies. Therefore, we have to give an adjusting entry against the supplies we have used during the period. If you subtract 500, the remaining supplies from the previous supplies, we got our answer, that is $350. So we can infer that the company Hempstead Realty has used $350 of supplies during the month of March, against which we have to record the adjusting entry and to transform this asset into our expense portion. So here we have part B. We have to follow, this is our adjusting entry. So you have to give the title just above this specimen of journal, that is you are performing an adjusting entry, right? So you have to write down fully adjusting entry as I am writing down in the short fashion. You have followed the same specimen of journal on March 31st. As we know that previously the office supplies was having 850 balance, as mentioned over here as well. And at the end of the month, the company is left over with 500 of supplies. So therefore, the used portion of office supplies is $350. So let me give you a solid explanation that when an asset has been used, it has been transformed into the expense portion. So when an asset has been used by the company, it needs to be transformed into the expense portion of the company. So until and unless a particular asset has been used, that will remain as asset of the company, but after the utilization or consumption, it has been transformed into the expense of the company. So previously the title of the asset was office equipment. Let me remove the ink to have a clear vision and explanation of this adjusting entry. This was the title of our asset, office supplies. However, $350 has been used in the month of March 2001. So therefore, we have to insert an expense title or word with this asset title, and therefore now the office supplies expense as a whole shall be treated as the company's expense title, not an asset title. So when there is increase in the expenses of the company, it is recorded as debit. And when there is a decrease in the asset, which is office supplies, as there is no title of expense or anything else, so therefore this title, simply the office supplies title, is our asset. When there is decrease in asset, it is recorded as a credit entry. And when there is increase in the expenses, it is recorded as a debit entry. So we have to correctly enter the relevant titles along with their debit and credit entries in the particular columns. So the rule states to first mention the debit entry. So therefore we have debited $350 against the office supplies expense, and similarly against the office supplies, which is our asset in this particular transaction, will be credited because our asset has been decreased by $350 what we have used during the month. The slide narration states that to record the office supplies expense for the month. So this is the way how you're going to record your adjusting entries. And after incorporating these adjusting entries, the question is asking us to make a trial balance in the next step, which is step number 5. So we have to make a trial balance, which is part C in the next portion or in the next part. And how to do that? We have to make an adjusted trial balance by incorporating the previous adjusting entries. This I'll discuss in my next lecture in detail, that how to incorporate adjusting entries into the adjusted trial balance and then to have the final adjusted trial balance. So now, up till now in the accounting cycle, we have completed the journal. We have posted entries into the ledger account. We have made a trial balance as given in this case. And now at the year end or at the month end, whatever the instructions are requiring us to do, so we have done certain adjusting entries. And in the next step, which is step number 5, in my lecture, in the subsequent lecture, I'll explain how to incorporate the same adjusting entry into the trial balance of the previous step, so that to have our final adjusted trial balance at step number 5. This was all about the discussion related with adjusting entries. If you have any question, you're free to ask your queries on KCMS, or another way around, you can also email me with your queries on my official email address. Good luck for the day. Allah Hafiz.